Welcome to Market Boys with Edmundo, Andres, and Xzabko. Happy Wednesday, everybody.
It's going.
So we got a lot of good, interesting things happening right now.
Very interesting. Hot market.
Hot market.
Hot market.
Okay, let's talk about that.
Sizzle it.
So the past week gave us some of the clearest signals we have seen in a while. Inflation is still elevated. Interest rates are not coming down as fast as people expected though. And the economy, believe it or not, it is still holding strong. So the question is, what does it mean that to you, right? What is the real meaning?
Well, that's what we have to find out. Because right now the data is mixed, and that's what creates confusion. Some numbers look strong, others are starting to show pressure.
Wow.
So the whole point of it over there is that, and that's exactly where people making mistakes.
Absolutely.
Confusion brings mistakes.
Indeed. And when there's uncertainty, people either freeze or react. And both can be costly.
That's right on point, Xzabko. So what happened this week, right? Because there was a lot of news this week, right? So let's take a break a little bit. So I know that EUA got out of the OPEC, right, boys?
Tell our friends where is the EUA.
Emirate United Arabs, which is the second largest production behind the Saudi Arabs. Saudi Arabs produce around 7.1 million, and the EUA produce around 2.5. But the big deal is that they just left the oil cartel, right?
Mm-hmm.
And pretty much like kind of say like, all right, now we are going to be able to produce what we want because they were constrained by the production of
They were
the
inside,
Arabs.
inside the frame of the OPEC, the cartel.
Correct. But the big thing is like the UA has the ability to change the oscillation of the production, so they can elevate it or reduce it. Whether
according to price,
the Saudi Arabia, they don't have that capability, so they have so much debt, right, on investments that they rely on high price of oil. Mm-hmm. So forcing the EUA to reduce the production. And the EUA has a very strong economy, very good book, and they diversify the portfolio really well.
Extremely, yeah.
So
Extremely diversified.
now they're trying to export gas as well, minerals, so they're very well positioned.
That would be the next step, of course.
Correct.
So being independent allows them to play with the price and take advantage of lower prices or higher prices.
Exactly.
So they can open the faucet when high prices are,
And diversify.
which allows to reduce the price in turn.
Because so very big, it's a big news, guys, because they've been of that part of that cartel, right? The oil cartel, you want to call
years,
it,
yeah.
more than 50
No, more
years.
than
So
50.
making that bold move, I mean, they know that is important for their country as well. They know how much reserves of petroleum they have. It's not going to be forever. They understand that too. So they've been able to diversify their investments, their production in different things, in technology as well. They're leading technology in Saudi Arabia,
And
the
now
whole
they are
Middle East.
manufacturing chocolate.
Ah,
Come to Dubai, Habibi.
Something like that, right?
No, it's true, chocolate with pistachios.
Correct.
Oh,
and
wow.
following to that, over the weekend we got big news, right? Striking news on the airline sector.
Oh, my God. Spirit.
What happened with Xzabko with the Spirit?
Watch out. I'm going to park a plane out front of my home here pretty soon here. I think that company, Spirit's going to get bought out. Unfortunately, they closed down, right? They closed down their doors. No more flights are being issued, if you will. So it's not looking good for Spirit. So who will buy Spirit? Will you do it, Edmundo?
I don't know, but the merger that would save Spirit was blocked like 2 years ago.
Right.
By the prior administration, because the concerns of monopolistical tendencies.
Yes.
So now the result is the bankruptcy, basically.
Correct. And I understand, like, I get it. Around 17,000 people are losing their jobs. My word to you is that it's not going to be forever, right? There is a market out there, but you saw what true capitalism is and what is needed to be. Because they actually, Spirit asked for a $500 million government loan to stay in business. And the government said no.
No
right?
bailouts.
No bailouts, which is good, right?
It
As
is
an economy,
good,
we
but
need that.
this
Hold 'em accountable.
Be careful,
Yeah.
because this coin has two faces.
Correct.
The government, in my opinion, not bailing out Spirit is doing the right thing.
Yes.
Because if not, you have to bail everybody. You can bail me that I have little sales on April, in May, so
Yeah.
no.
Bail
you
me out,
cannot bail.
right?
If you bail everybody. If not, you don't bail anyone. But the other face of the coin is that there was a plan to save Spirit, a private plan, around 2023, 2024, when the whole thing became evident that the company cannot withstand bad times, and the government blocked it. So no intervention.
Well, the previous administration.
The previous administration, no intervention from the current administration, I think is healthy.
Yeah.
But the problem is that before the government, it doesn't matter what administration is our government, it's our president, we like it or not, the prior or this one, they block the private initiative to save Spirit. So this is the
Bingo.
point. Or we are out,
We're in, yeah.
or we are in.
That's a really good point,
It
Edmundo.
is terrible
you make.
what happened.
Correct.
It's terrible.
And unfortunately, what happens is, and this is my personal opinion, right? Is like we're pointing on the right direction of making a free economy as we claim to be.
Yeah.
And unfortunately, there are some institutions that, yeah, they're going to pay the price. Was it fair because they had a shot 2 years ago? Absolutely, it was not fair that they blocked that, right? But today, the government did the right thing, right? Letting just the markets do their thing, right?
Yeah, because the market
Administration.
has an effect of big recovery. Did you hear about the big depression of 1921?
Yep.
No, you didn't.
No.
Well, I didn't
29,
hear it.
29.
I read about it.
But you know why?
I wasn't alive at that time, guys.
No, but you know why? Because the government in 1921 did not intervene. So what it could be a big depression became just
Turns into
a
hyperinflation.
little recession. But the big depression of 1929,
29.
30,
The
the
government
government intervened.
intervention.
Yeah.
So the government elongate,
Prolong.
for a long time what it should be just a recession, it became a depression.
Right.
So
Yeah,
if
that
we
makes
learn
sense.
from history,
That makes sense. Touching back on Spirit, historically, what happens when the government bail them out? What do the companies normally do, right? They know the game. So they end up buying more shares of their company, right? And then they give themselves a big old bonus check and things like that. But, on top of that, I mean, hey, these airlines, they have a lot of protocols. So they may skimp on like repairs, things like that, right? Who knows, right? So it could be
I don't know about that, Xzabko, because running a airline is extremely expensive. The margins are very tight.
Tight.
And
Yeah.
a company like that they just specializes on like running very cheap flights you want to call it, right? They were not prepared for the high prices of gasoline. And jet fuel is extremely expensive.
Exactly.
That's what actually kills them, right? They didn't have enough margin to just
Yeah.
sustain.
they didn't have
Residual-
futures
residual.
accumulated.
Correct.
Yeah, but you have to remember Ronald Reagan says, if it moves, tax it.
It has a meter.
If it keeps moving, regulate it.
That's right. Who
Yeah.
said
If
that?
stop moving, subsidize it.
Someone said that.
That is what exactly we have to avoid.
that's right.
Reagan was a visionary.
There you go.
What was the
Edmundo-
name?
Ronald Reagan.
Ronald Reagan.
No, there was another guy that said if it has a meter on it, tax it, right?
Yeah.
I forget.
That's right.
It was Tesla's rival. Who was
Was it?
Tesla's
rival. The one that
was a well-known
with
guy.
R,
Very-
reader.
Riven? Riven? Rivian.
Rivian.
Rivian?
Not really.
I don't know.
Well, Lucid is the Tesla's rival. That's the one that the guy left Tesla and opened his company and they built better cars. Well, anyway. So let's break it down what actually happened this week, Edmundo, right?
Let's go there. Let's break down what actually happened this week. Markets has been volatile but not collapsing. They are reacting to interest rates, inflation, and global tensions.
Holy cow.
Well, but this is the point. Treasury yields are rising again. The 30-year just moved above 5%, and 10% is around 4.4, even though today they have a little relief. Oil prices jumped to around $105 per barrel. Today, again, they are down 4%. And that is all due to geopolitical tensions, the war, the Strait of Hormuz. That's important because energy is driving inflation again. The interesting thing is that market is not crashing in spite of all of this. It is adjusting to reality. People didn't expect ratings staying higher.
Yeah.
They were expecting the opposite.
Indeed.
Yeah, the rates are keep putting pressure, right?
Exactly.
It's not helping. So, and that's the key, guys. Most people build their expectations around lower rates, cheaper money, right? And smoother markets. That's not the environment that we're in anymore. And you have to be conscious about that.
Absolutely.
There is an adjustment that we have to make in all our accounts, investments, insurances, etc. Our money in general.
Yeah.
And when the environment changes, your plan has to change with it.
Exactly.
And that's the key.
Right?
Of course.
Be dynamic, right?
Absolutely. 100%.
Now, inflation rates, the Fed, the real data, Edmundo, bring it down.
Let's talk about inflation, because that's driving everything. Latest inflation readings show around 3.5 to 3.8%.
Oh,
Wow.
In that range, we are still above the 2% Fed's rate range. They don't act until the 2%, theoretically speaking.
right.
Some projections are now saying inflation could move back towards 4%, which historically, it will be, let's say, average will be okay. But that's for 2026. Energy prices alone, the big driver, are over 12% year over year. And this is the big shift. Just a few months ago, people expected rate cuts. Now, markets are starting to price in no cuts for 2026.
Okay.
Which was kind of like we were expecting. We have some conversations with some economists over a week ago. I remember that, a couple of weeks ago.
Yes.
Consensus was very smooth, right? Among them, most
The
of them, they were like
consensus is between zero cut to
25 basis points.
25, at the most half a percent.
Yeah, that was the most optimistic that we saw.
That the most optimistic was 0.5%.
Yeah.
So the market is feeling that, but still we need to see what the new Fed chair, how he's going to chair the next meeting of the Federal Reserve.
How is going to maneuver that,
Interesting how the market will react to the next Fed meeting.
It's
Let's
going to
see.
be very interesting.
So that's a big deal for you, for your strategy, guys, and for your plan, right? Because higher interest rates for longer means borrowing stays expensive. Investments behave differently. And retirement planning gets tighter. What's your plan, right?
Absolutely.
Be careful with what you wish for.
I don't wish for that.
Exactly.
I wish that it can pass as fast as possible.
We prepare instead of wishing.
Can you survive the storm? I mean, like we just saw the first company that wasn't able to survive it, and we just talk about Spirit, right?
Exactly.
It was the first one. It doesn't mean that it's the last one.
Oh, no. That's ongoing.
Yeah, no, inflation is bad for everybody.
Cycle.
Correct. It doesn't help.
Gasoline 12% is
It's brutal, right?
And it also means something people don't think about. Waiting becomes more expensive. Expensive and more expensive. Did I say more expensive? Delayed decisions, whether it's investing, protecting, or planning, can cost more in this environment.
Yeah, especially Xzabko, if you are between like you're 45 and 65 years old, with pretty much you like getting to the prime or close to your retirement, right? Like you're on the last 10 yards, you want to call, of your race of productivity.
What is the only thing we never recover?
Person 10.
What is the only thing we will never recover?
Time.
Yeah, time.
And
Indeed.
when we are, as Andres says, when we are between, after 45, let's say, just rushing into the 50s, we need to have time.
This sounds more and more
But
like
we
football.
have less, exactly, we have less time.
We got a blitz. Come
Yeah.
on.
Exactly.
Correct.
There's no time to waste.
Right. So think about that. Like if you're in a football game, right, and you just finished the halftime and you are winning, I don't know, 20 to 7 points, right?
It's time to seal the deal.
Correct. You want to seal the deal. You don't want to go aggressive and try to score 60 points, right?
You gotta stay consistent.
Exactly.
So
You have it in your
you bring a
pocket.
strong defense.
Bingo.
But what happens if you are the other team? 7 to 20. Not 20 to 7, but 7 to 20. Now time needs you.
It's time to put the stakes on the grill and go all the way in.
Time to be
Absolutely.
aggressive.
All
Right.
in.
Correct. So that translates pretty much to the markets, right? And what we do and what is your strategy, how dynamic is your investments or your positionings, especially for retirement. Making sure again, guys, if you're on 45 to 65, how dynamic is your portfolio and how much cushion it has to support, right?
And how much
these
time you
turbulent
have
times. Yeah, time.
to accumulate, to distribute.
What is the balance in income and growth, right? Is you still like your portfolio still in growth mode or it's still like growth and it's also start accumulating income? That's important because it's a big shift that most people don't
There is
plan.
there is a lot of moving parts like an old mechanical
Clock.
Yeah,
and all of them should be coordinated as precise as possible.
that's right. Now, let's talk a little about the economy, jobs, and global events.
Okay. About the economy, because this is where it gets really, really interesting. The US economy is still growing around 2% GDP, which is not bad, not good, but it's growing.
Yeah,
It's positive. All right?
hey, most companies, most countries don't grow at that. So
Exactly. Unemployment remains low around 4.3% range, which is
it's decent.
decent, strong. Consumer spending is still holding up, especially at higher income levels. So we are in a weird place. The economy is strong, but inflation is also strong, and that creates tension.
And this is what people need to understand. This is not a recession environment, but it's also not an easy growth environment.
Yeah, that's true. Very true. And on top of that, you've got a global pressure. Geopolitical tensions are pushing oil higher. That feeds directly into inflation, which feeds into rates staying high. Everything is connected right now.
That's right.
There is
It's
a
like a
magic
big
pill
web.
here.
It's like a big
Let's
web.
say that is the war ends. How you see oil going? Back to 80s? I mean, French talking about $80 a barrel.
I believe it will come down slowly, not
Slowly.
fast.
I don't think it's going to be coming down to 80 anytime soon, unfortunately.
No, let's just play the game.
Right,
Let's say
right.
there is peace tomorrow. So that will restore confidence in the markets.
Correct.
And the oil price should go down. The question is how fast
That's the bigger
we'll
question.
go back to 70s, 80s, in which we finally can have a decent relief at the pump.
Yeah. I'm a big believer that everything that happens very fast becomes dangerous. Okay? If it stabilizes, right, at the right time, like timing is important, not too fast, not too slow, right? So,
So you're
the
looking,
economies
you're looking
come
for
back in.
stability through the times. Something.
Correct. Because time fixes everything.
No.
All heals all wounds. Indeed.
Yeah.
Yeah.
That's right.
Time heals all wounds.
That is right.
Right. That's a good one, actually. Yeah. Now, what this means for you, right? And where you are on your position today. So let's bring this back to you. If you are between 45 and 65, this is what matters, right? Rates staying higher is the same as the strategy must adjust. You can plan based on all assumptions. That doesn't work anymore, right? The environment has changed. You need to realize that. Inflation still matters. Even at 3 or 4%, it compounds over time. It affects your retirement income big time, okay? And markets will stay volatile.
That is a good take. Volatility is not a signal to panic. It's a signal to stay disciplined. Protection becomes more important.
And costs are rising, risks are rising, and most people are still underprepared.
Wow.
We need to get prepared.
Yeah, that is true.
Yeah. Now, the biggest mistake right now is in the market, is reacting emotionally to the headlines, right, Edmundo?
Exactly.
And not having a plan that connects everything.
Yeah. True.
Yeah, that's a good point, Ed.
Hey,
Now, if you're watching all this and feeling uncertain, that's normal.
That's absolutely normal. But uncertainty doesn't mean stop. It means get clarity, information.
clarity, it comes with understanding your full financial picture.
So remember, if you want a second opinion, you're not sure how all this applies to you or comes together, you want to have a conversation, reach out. Our information is below. Do link. And remember, hit a like, subscribe. It's free, right? To get that information and support. We appreciate you following us and listening. And stay tuned for more market news with the Market Boys. See you next week.
See you next week. Thank you.
See you next week, guys.
Take care.